Big Brother will be watching. In this episode, I'm going to address what is Biden's motive for the IRS to monitor your bank accounts. So this does not have any type of political agenda, but I want to give you insights into why many politicians do what they do and how this can lead to unintended consequences. So I'm Doug Andrew, and I've been a financial strategist and retirement planning specialist now for 48 years. And so throughout my career of nearly 5 decades, I've noticed that whenever Congress gets together, there is a reason that progress is the opposite of Congress, okay? Now, many people have been asking me on this channel and at the various educational events that I speak at, and I have a national radio show. So, Doug, what is President Biden's real motive? What's his agenda to have the IRS start to monitor all of the transactions in our bank and credit union accounts? And so here's my take based upon what they have shared so far, and I'm talking about President Biden and his administration, and what this means for you and how this can be sometimes the beginning of opening a door a little bit, and then it will swing wider and wider and wider, which always concerns me. So here we go. Now, according to the Biden administration and Janet Yellen, they are looking for tax revenue. Hello. There have been a lot of proposals, legislation and bills, stimulus spending, and thus far, as of the recording of this episode, it's October of the year 2021. From January to the end of August, the Biden administration has already spent more than the government spent in the year 2021 with the COVID-19 or 2019. Probably by the end of the year, those 2 years combined. They're actually spending about 3 to 4 times what they bring in revenue. So, based upon economics, and a lot of politicians unfortunately do not understand economics, you cannot be making $100,000 a year, let's say, and continue to spend $300,000 or $400,000 a year. You can't keep doing that. So when government spends money, they have 2 choices. They either print money, and they've been printing 100 billion new dollars every single month for quite a while now. They said it was going to be temporary, and they raise taxes. Now, one of the strategies they have been sharing is they feel like there is about $500 billion in taxes that people owe that they're not disclosing, they're cheating, or whatever. And so what President Biden is proposing is that the IRS monitor every single bank, credit union, savings, checking account transaction in excess of $600. Now, do you know how many transactions that is a year? So anytime anybody deposits or withdraws $600 or more in checks or cash or whatever, he wants the IRS to report that so they can track, okay, is there some money here? Now, if you don't know how the IRS works, whenever they look at situations where people buy or sell properties or whatever, they have algorithms. And if things don't match, it triggers and puts it over into an audit pile. And this is what they're trying to do, is to create, I'm sure, algorithms to be able to kick out and say, hey, you better check this person or that person or whatever. Maybe they're not reporting all of their income, or they made a lot of deposits. This doesn't seem to match the numbers on their tax return. It's easy to create software, algorithms to do that. So that's why I say Big Brother's going to be watching really, really close. When we think about those kinds of transactions, not only is that massive, and yeah, okay, everybody should pay their fair share of tax. You can justify. But this is what I have found happens when we allow certain factions of the government to get more and more involved in our personal affairs. Once they understand how they can do that, they then take liberties when they can justify it with all kinds of things down the road. So I'll give you an example of this. Back in 2008, when a lot of people don't really realize, we came very, very close to a total financial collapse in America and the world. And in fact, the comptroller, David Walker, he resigned because he was not allowed to tell the American public how much trouble we were in. And so he resigned. This was under the beginning of the Obama administration. Now, we barely came through that, but we had that huge 40% drop in the market in 2008. 400 banks went under, 900 more were on the brink of going under on the watch list. And so it was a horrible time. It took 4 years for most Americans to make back what they lost in that one single year. And in fact, that whole 12-year period from 2000 to 2012, many Americans lost 40% in the value of their retirement portfolios twice in that decade. We call it the lost decade or the Great Recession. Well, guess what happened? In Australia, they monitor how much money people have saved in their equivalent of what we call a Roth. And so they have an option in Australia where people can pay tax on the contributions they put in. They contribute money into a retirement savings plan with after-tax dollars. And I don't know what they call it, but it's like our Roth. And it accumulates tax-free, and the government says later on you'll be able to take out the money tax-free. Well, the government was so hard up for revenue, they decided to change their mind. And President Obama looked really carefully at doing this in America. A lot of people don't know this. The Australian government said, we need the money worse than they do, or else this whole country is going to collapse financially. So they changed their mind and they said, we're going to tax it. We're going to go in tomorrow into all of your equivalent of Roth accounts and deduct X percent. So let's say it's 20%. So if you had 100,000 in there, or you had over a certain amount, they would just go in one fell swoop and pull out 20,000 of your 100,000. Now, how can they do that? Well, if they know your account numbers, if they know how much money you have in there and your pattern of deposits and withdrawals, it is a no-brainer. And this is what they did in Australia. This is what I'm afraid of when we have government and entities justifying knowing everything that goes on in your financial accounts. It just opens the door for them to be able to go in and grab anything they want if they deem necessary, if they can justify it. And that's what I mean by sometimes the door opens a little bit and they get their foot in the door of our privacy, and then it swings wider and wider and wider, and that concerns me. So I know the motive on why they're wanting to do this, to try to find tax revenue that they think people are not paying that should be paying it. But I think it's the beginning of something that could get out of control, and we could see a huge rebellion sometime down the road if they overstep their bounds. So if this is intriguing you, one of my passions and purpose for this YouTube channel, Three Dimensional Wealth, is to give you insights into all kinds of topics that can help you prepare and protect yourself. So I would recommend you subscribe. Just click below and also click the little notification bell so that you'll be notified every time I post a new educational video, which I do almost on a daily basis. Click like, post a comment, share with somebody who you think ought to hear these messages. And stay with me here. I'm going to gift you a copy of my most recent best-selling book. It's a 300-page book called The Laser Fund, How to Diversify and Create the Foundation for a Tax-Free Retirement. So here's my take and what I think you should be doing to protect yourself. When you accumulate money, I have told my clients, thousands of them for years, that rather than have your money that you save trapped in traditional accounts, IRAs and 401ks, in the market with brokerage firms or banks or credit unions, You take your serious cash, the money that you want to earmark for retirement, and you put it over into the multi-trillion-dollar insurance industry. This is where banks put a lot of their money for liquidity and safety, and it would be the last domino to fall if we had a total financial collapse in this country, and that's where I put my money. And so what you're doing is you're putting it into a maximum funded indexed insurance contract is my favorite vehicle, and I call it the LASER fund. LASER is an acronym that stands for Liquid Assets Safely Earning Returns. But under 3 sections of the Internal Revenue Code that have been a sacred tax-free cash cow for over 108 years, since 1913, money can accumulate tax-free, you can access it tax-free, and when you die it blossoms and transfers tax-free. Can the IRS know about that? Yes. But in every case, when I have clients that have $1 million nest egg and it generates $60,000, $80,000, $100,000 a year of tax-free income, the IRS knows they're receiving that, but they know it's tax-free. It's a no-brainer. You can learn and understand why. So I would recommend that use a bank account for just, your everyday living and transactions, but don't use it for the serious cash that is earmarked for long-term goals like retirement. So here's what I want you to do. Go to laserfund.com, L-A-S-E-R fund.com, and you contribute just a nominal amount toward the shipping and handling. I'll cover the rest of that, but I will pay for the book, and I'll send it out to you. There's options there if you want to listen and learn and watch and learn. This is actually 2 books in one. One side is 200 pages, 14 chapters with all kinds of charts and graphs. When you flip it over and you read this one, this is 100 pages, 12 chapters with 62 actual client stories on how to diversify and create the foundation for tax-free accumulation for retirement, but college funding for your children, your grandchildren, your business, all kinds of things. This is where savvy people protect their money so that it's private, it's tax-free, and it's going to be there for you.